Ladies and gentlemen, good day and welcome to Q1 FY25 conference call of Transformers and Rectifiers India Limited. As a reminder, all participant lines will be on listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference call is being recorded. I now hand the conference over to Mr. Shubhadeep Mitra from Nuvama Institutional Equity. Thank you, and over to you, sir.
Good evening, friends. On behalf of Nuvama Institutional Equity, welcoming you all to the first quarter FY25 results conference call of Transformers and Rectifiers India Limited. We have with us today the top management of the company, represented by Mr. Jitendra Mamtora, Chairman, Mr. Satyan Mamtora, Managing Director, and Mr. Chanchal Rajora, CFO and Advisor to the Board. I would now like to hand over the call to Mr. Satyan Mamtora for his opening comments. Over to you, sir.
Good evening, ladies and gentlemen. Thank you all for joining us on this earnings conference call. We are delighted to have you here as we discuss the company's performance over the past quarter and the year ahead. Following on our board meeting earlier today, we promptly released our financial results and investor presentation on the stock exchange. We are particularly pleased with our order book position and the diverse range of orders secured throughout the year across various sectors, including solar power, private industries, and power utilities. Notably, our new orders this quarter amounted to 698 crores. Additionally, we have achieved a significant milestone with the maiden order of 4 STATCOM transformers of single phase, marking the first for an Indian company to in the specialized segment. Our unexecuted order book as of 30th June 2024 stands at 2,929 crores. Currently, we have inquiries worth 17,500 crores under negotiation and bidding stage. Looking ahead to the remainder of the fiscal year 2025, we have successfully navigated through phases of stabilization, turnaround, and growth. We are now focused on consolidation, expansion, and achieving sustainable profitability. We have implemented strategic growth initiatives across the organization, which are already reflecting positively on our performance. Our revenue targets for the year remain unchanged. We extend our sincere gratitude to each participant for joining on our earnings call and for your continued support and trust. We hope we have addressed all your queries satisfactorily. Moving forward, we are excited about the upcoming milestones. New capacity for renewable energies will commence production from December 2024. Our fully automated regulator manufacturing facility will be operational from September 2024. We have initiated journey towards backward integration of critical components, exploring new avenues for organic and inorganic growth. Our revenue targets for current fiscal year remain steadfast. Furthermore, we are proud to have received an Operational Excellence Award from Power Grid and to have successfully exported 220 MVA electric arc furnace transformer, one of the largest ratings ever manufactured globally. Once again, thank you all for your participation and support. We look forward to your continued partnership as we progress into the next phase of our growth journey. With this, I conclude my remarks, and now I would like to hand over the call to our CFO, Mr. Chanchal Rajora, for his comments and financial parameters.
Thank you, MD sir, for providing an overview on the current quarter as well as the year ahead. I would now like to share some key financial highlights with your esteemed shareholders. Dear shareholders, I am pleased to present the accomplishment of our company for the first quarter of FY25, which has been one of our strongest first quarter in recent past years, marked by the substantial growth in the revenue and profitability. Financial highlights. In quarter one, our standalone revenue reaches rupees 311 crore rupees, reflecting an impressive year-on-year increase of 103%. We achieved an EBITDA of rupees 42.53 crore rupees, a significant rise of 633% year-on-year basis. with an EBITDA margin of 13.65%. Our profit after tax stood at rupees 18.41 crore, showing a robust increase of 268 year-on-year, with a PAT margin of 5.83%. Our consolidated revenue reaches to 322 crore rupees, reflecting an impressive year-on-year increase of 107%. We achieved an EBITDA of rupees 46.22 crore, a significant rise of 650% year-on-year basis, with an EBITDA margin of 14.35% at consolidated books level. Our profit after tax stood at 20.87 crore rupees, showing a robust increase of 268% on year-on-year basis, with a PAT margin of 6.4% on the consolidated books. During the quarter, we secured the orders for totaling 698 crore rupees, highlighting our strong momentum in order inflow. As of June 30th, 2024, our unexecuted order book states rupees 2,926 crores. We are delighted to announce a significant achievement for our organization as it successfully raised 500 crore rupees through a qualified institutional placement in just 3 weeks' time, marking a historic milestone in the Indian market. This accomplishment not only underscores the strength of our business fundamentals, but also reflects robust investor confidence in our vision and the growth prospects. The unprecedented speed with which we completed the QIP highlights our efficiency and ability in navigating financial market, further solidifying our position as a leader in the industry. Throughout FY25, we have placed significant emphasis on the people management and the upskill initiatives, acknowledging the pivot role of our workforce in our success. We are focused on enhancing technical skill for forecasting leadership readiness and improving overall competitiveness across our manufacturing, sales and engineering division. Looking forward, we are optimizing about our prospects for FY25, anticipating enhancements across various financial metrics. Our strategies are centered on achieving a streamlined balance sheet by reducing debtors and optimizing inventory management. Our ultimate aim is to transform into a debt-free company in the near future, supported by the clear and actionable plan already underway. In conclusion, we are all well positioned to capitalize the opportunity within India's evolving energy sector with robust corporate governance, advanced technology, superior product, and a dedicated team. We are confident in our path towards the sustainable and profitable growth. I extend my full gratitude to our customers, the board and management, and particularly to our committed employees for unwavering dedication and support. Thank you very much. Subhadip. Moderator, we can start Q&A session, please.
Sure thing. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead, sir.
Yeah. Good afternoon, sir. And congratulations on a very, very good set of numbers. So my first question is, can you just talk about the opportunity landscape, the breakup of rupees 178 billion orders under negotiation? Is it possible to break this into power transformer and distribution transformers? And any timelines when you expect this order to get finalized?
So most of this would be, let's say 95% of this would be in power transformers and solar transformers. Remaining 5% would be distribution transformers.
And is it fair to say that we are talking mostly about interstate transmission system in India?
Yeah, we are talking about mostly about interstate transmission systems in India.
And My second question is, can you talk about the reactors order book? It has grown massively last 2-3 years. Is it primarily for high voltage? And any color on the competition on the reactors will be very, very helpful. Yeah.
See, as far as reactors are concerned, there are very few players. 5 or 6 players are there in the game who are manufacturing these and who have the technology for manufacturing reactors. Demand for the reactor is going to go primarily because of the renewable energy, which creates a lot of harmonics, and then it's to be filtered, and then it will disturb the grids. To stabilize the grid, you need the reactor. So it is now, it's just like if I see the recent orders, with one transformer, there are about 2 to 3 reactors, something like that. So requirement of reactor is increasing like anything, and it is also, they are intending to increase the capacity of the reactors much above today's limit of 110 MVAR for 765 kV transformers and 125 MVAR 3-phase for 400 kV transformers. They are going to increase this to improve the efficiency and to also reduce the overall cost of the reactor.
So is it fair to say that the reactors would still be around 700,000 crore per year market, or do you think it will be much smaller?
It will be something like that. It will be something like that.
Understood. My last question, sir, when do you expect to see your IDT transformer booking starting? Is it fair to say that we can see some amount of booking in Q2 or Q3? Q2?
See, we have, we are forced to accept some orders from some of our valued customers. We can't deny them. But, we are going to automatize the production of the IDT transformer, not only to reduce the cost, but also to improve the operating efficiency so that we can deliver something like 100 transformers per month. This is our ultimate goal, and we are getting ready for that. We have ordered the machineries. We have started the construction for the new bay. It's going to be exclusive bay for manufacturing IDTs for the solar plants, smaller transformers up to 15 or 16 or 18 MVA. And besides that, some special transformers will also be produced in that, which matches the compulsion will be the restriction of the crane and the height of the crane. So whatever we can do in that, we will do it, which includes transformers like rectifier transformers, and also for the upcoming hydrogen projects for which we have started getting the inquiry. We have manufactured one for GE USA, and we have supplied to them. So many more orders are going to come from there. The total requirement is something like 2,300 transformers in a year, only for hydrogen projects. Electrolyzers. So electrolyzer, the rectifier, and the transformer. We'll be supplying only the transformer. Rectifier part will be supplied by somebody else, and electrolyzer will be their own make, or maybe they may outsource them, like they outsource rectifier and the transformers.
So
this is the main, yeah.
Are you expecting something like 30-40 GVA of IDT market for in India for the next couple of years? Is it fair to assume that?
Very frankly speaking, we have not really worked on that. But there are ample of business, like we were talking to Adani, they need about 1,000 transformers in a year. Similarly, companies like Renew, companies like ECME, they also require that, and recently Avada also, they require something like 700, 800 transformers. Each transformer will be costing around, if I'm not mistaken, about 1.2 crores.
1.2 crores.
It's something like that. So it's a huge opportunity. It is only based on how reliable you are and how quickly you deliver, because everything is based on your delivery time. So we are trying to set up the plant for manufacturing 100 transformers in a month. So that means about 100 transformers in a month, 1,200 transformers in a year. So almost 4 transformers a day. So it is, we can easily do that. You know, we have done that in the past for the Adani. So we can do that. It's not a big thing.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ganesh Ram from Unifi Capital. Please go ahead, sir.
Yeah. Am I audible?
Yes, you are audible, sir.
Yeah. Okay. So just if you could help us understand in connection to the previous question, solar IDTs, the capacity that's coming in, I think you mentioned in September 2024, like what's the competitive landscape like for this particular product? And then do we see any impact on the margins, on the positive or downside? Maybe that's the first question.
So the new plant will be operational by we start producing transformers from the new plant in December 2024, sir.
Okay.
And the competitors there are also competitors there, but with the kind of situation, everybody is either booked or they have enough to supply the transformers. So there is no such undercutting for the price of the transformers.
Got it. And just to sort of understand how, the realizations and margins sort of compare to our existing product mix, yeah.
The realization will be very similar to the current product mix. There should not be any change, positive or negative, towards the realization of this on this new transformers that we are manufacturing.
Thank you.
Thank you. The next question is from the line of Shubhadeep Mitra from Nuvama.
Yes, sir. So my question is, firstly, just clarifying on the guidance. If I remember correctly, I think your previous guidance for FY25 was sales of 2,000 crore for full year and around 14% EBITDA margins. Are you still maintaining the same guidance?
Subhadeep, if you just heard our opening comment of Satyen sir, he has clearly mentioned that our revenue guidelines remains in the same line. So we will be 2,000 crore rupees is quite achievable, and we are working on that. And EBITDA margin will definitely be on your expectations.
Understood. And similarly, if one is to take, let's say, a view 2 to 3 years down, what kind of, let's say, revenue growth over a 2-year period, and let's say target margins over a 2 to 3 year period would you be looking to target or achieve?
Subhadeep, next 3 years, we are well poised to reach 4,500 to 5,000 crore numbers on a standalone basis, with the EBITDA levels of somewhere 16 to 17% levels. And we also see a better growth in our consolidation books in terms of the numbers because of the backward integration and backward expansions what we are doing.
Understood. If you could also, help us with an update on the acquisitions that you were targeting to do as well as the backward integration.
Okay. Subhadeep, we have raised the QIP in last month, and there are certain objects we have mentioned in our PD, and we are working on that directions, and I'll make you sure that the funds will be utilized only for those purposes. And soon we will be starting working on those directions. We already started working on the backward integration side on the fabrication unit. As one of the largest fabrication unit, we are working on that. Work has started on that part. And on the another side, we are working on that, and when the right time will come, we will definitely announce that.
Understood. And lastly, I think sir mentioned that we are looking to have the new facility having the ability to manufacture, a large number of transformers on a monthly basis. So that is going to come from the new factory, which is expected by December 24?
No, we are expanding our Changodar plant. So the December 2024, Changodar plant is being expanded to include solar transformers and green hydrogen transformers.
Understood. And the ability to do, 100 transformers in a year, that will be from which year?
Yes. This new facility, what we are making in Changodar, you missed last month May visit actually. You would have seen by yourself the progress there. So we are expecting somewhere between 12,000 to 15,000 MVA yearly basis from there. So as the chairman sir just guided that 100 transformer of 15 MVA range will not be a big thing from there.
Understood, sir. Perfect. Thank you so much for answering my questions.
Thank you. The next question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Thank you for the opportunity. So my first question is that so there are some news articles stating that 44,000 crores of transmission projects are getting delayed by PGCIL. There are 18 projects getting delayed by 32 months and 8 projects getting delayed by 12 months or so. So what's your sense on the delay, because that might delay the execution, though it's the need of the hour and demand for transformers is really good in the industry. So is there a delay in the execution on the transmission side, and how can it impact us in terms of execution, if you can guide?
See, this is the report which we have read today in the paper about the trouble they are facing for executing the entire project as they have promised because of the availability of the fund. But I think, with PGCIL, there are other private players also like Adani and Tata Power and Sterlite. So they will be pushing in, to get these orders. Now, so far, whatever orders have been placed are mainly from the orders which we have received are mainly from Power Grid. Now, they may have been, I don't know, why they are of the opinion that there may be, they may stall some of the projects, but I don't see that. The kind of what should I say? The feeling which we get from them, they are even now trying to get into 1200 kV AC lines, H2 or 3 of the 765 kV lines they will be converting to, or 400 kV lines so they will be converting to 1150 kV lines, and they have called for the meeting of the stakeholders to see their response, whether they will be ready with this. So our person was the same thing, that if there is no enough order, investing for 1200 kV transformers separately will be a big challenge. But we need some clarification from them, how much transformer they are going to require, and on the basis of that, people will come out with the facility. Because it is to be manufactured in the same facility, but they are going to be much larger transformers than what they are buying today. It will be a bank of 3000 MVA, single bank, as against today what they have is 1500 MVA. So 1500 MVA to 3000 MVA is a big jump. But the problems will be faced in transportation also, because each transformer will be weighing something like 425 to 450 tons. So transportation, that the bridges which are built are in a position to take that load, or they will have to have a separate route for that, something like that. So these are the challenges, but this is going to come by 2027. That is what they are expecting. So, I don't think there will be a slowdown as mentioned in the paper today, the news, small news which has come. I don't know why, but we are not getting any feeling like that from Power Grid.
On the contrary, we are being, we are having meetings with them every weekly on our dispatches and how we are going to meet their targets. So, in fact, they are pushing us to do more. So, it is on the contrary what is being said in the newspaper today.
Okay, so you think there is not much delay in terms of not only PGCIL, sir, but other ways also on the transmission side, because there are a lot of external factors also for them to, get it executed. So is there anything where we are not only from their side, but on the other fronts also might be a delay in execution, or are we on track? Because
we are very much on track.
Very much on track. Okay.
Gunjan, then there is one more thing I want to add, that a week back, if you have seen the news article where the central government has basically instructed power utilities to enhance their capex on the T&D sides.
So the enhancement capex guideline is already there, and there is going to be a huge demand, but that is there. I'm not denying that, but just on the execution front, because you are into this business day in, day out, so you might know a little better than what all of us know. So just wanted to gain an insight, because this is a need of the hour that's there. I mean, because the generation is happening, transmission has to be there. So my second question is, what is the strategy in terms of the export market comparatively? Because there are high numbers of on the transmission side of what US, Europe, and Africa are going to spend on the transmission. And so, what's our strategy going forward for the exports? And I guess comparatively margins are also a little higher, and we have got some approvals. So, how are we seeing the export markets going forward?
Gunjan, if you have been tracking our hearing calls and investor calls, our investor interaction, we have been always guiding about the export strategies, that how we are focusing on the export market. Also, we have mentioned in our various calls that we have a target of reaching 25% of order book by end of FY26. And we are working on that directions. We have our full-time employee based out of, you can say, Europe. We have our agents across the countries, and we are increasing our footprints, and we have significantly actually enhanced our export team. So we are working on that directions, but in the same time, we don't want to lose our Indian customers or Indian opportunities just in order to have the export market, which will give the room to the other people to enter where we are strong. So we are balancing and working on both the sides, and as guided that FY26 you will see 25% of our entire order book will be from the export side.
Okay, got it. So the third question is, when we talk about, we are getting backward integrated, like into tanks, radiators, and, bushings and core CRGO. So, what kind of an EBITDA margin, like how much of that supply is right now captively used? Are we sufficient in terms of our capacities, but though we are enhancing it as well? So likewise, if I see a power transformer company manufacturing transformers plus with you guys manufacturing with backward integration, so what kind of a margins can we see? Because tanks and all are also 8-10% EBITDA margin business. So what kind of a margin expansion, or maybe likewise, what's the difference that we can see if we compare two players with backward integration and not backward integrated?
See, there is a misconnect there. Today, if you see the EBIT margins with the tank manufacturers, it is more than 25%. Yeah, it's huge, because there are no availability of the tanks in spite of so much of requirement of the tank. So everybody is struggling to get the tanks at whatever price. The tank which we are getting at 110 rupees today is costing me 160 rupees. And if I go for export of those tanks, it will be more than 350 rupees a kilo, taking into account 20% as the transportation cost from here to America, still, you will make a huge profit. So, and the plant which we are